We're back now with the latest on disgraced crypto billionaire Sam Bankman-Fried, who appeared in a Manhattan court yesterday. The former boss of the collapsed crypto exchange FTX pleaded not guilty to fraud charges.
Have you ever wondered what could bring down a billion-dollar cryptocurrency empire? The collapse of FTX, founded by once billionaire Sam Bankman-Fried, may provide some insight. But what exactly caused the fall of this once successful exchange? In this video, we'll explore what went wrong at FTX and insider details on the demise of a crypto trading giant. We'll also consider the lessons that can be learned from this cautionary tale and the importance of transparency and ethical business practices in the constantly evolving world of cryptocurrency. So join us as we try to piece together the puzzle of the FTX collapse and uncover the truth behind the fall of this once thriving exchange. The meteoric rise and sudden fall of Sam Bankman-Fried's multi-billion-dollar empire, FTX, has been a topic of much speculation in the business world. Bankman-Fried is an American entrepreneur who founded the cryptocurrency derivatives exchange known as FTX in May of 2019. Prior to his work with FTX, Bankman-Fried was an early investor and advisor to the world's leading cryptocurrency exchanges, including Coinbase. He quickly rose to prominence in the crypto space for his highly successful investments in various projects and his ability to spot market opportunities. Bankman-Fried is an alumnus of both Stanford University, where he obtained a degree in computer science, and Harvard Law School, which he attended on a full scholarship. Prior to FTX, Bankman-Fried also gained significant experience in the finance industry while working at Goldman Sachs and Bridgewater Associates. FTX was founded with the vision of becoming a global leader in providing liquidity solutions for digital assets, and it quickly became one of the most successful crypto derivative exchanges in the world. Under Bankman-Fried's leadership, FTX experienced tremendous growth, and it quickly became one of the leading cryptocurrency exchanges in terms of volume and liquidity. FTX initially focused on offering futures contracts for a range of cryptocurrencies, including Bitcoin, Ethereum, and Litecoin. In its first year of operation, FTX quickly gained a reputation as a reliable and user-friendly platform, with a strong emphasis on security and transparency. In addition to its own platform, FTX also partnered with some of the largest brokers in the world, including Binance US, Huobi Global, and OKX. The exchange also launched several innovative products such as the FTT token, which provided access to a basket of cryptocurrencies to its holders. One of the key milestones in the early growth of FTX was the launch of its OTC or over-the-counter desk in 2020. This allowed the exchange to offer large block trades for institutional investors, further solidifying its position as a go-to destination for professional traders. However, despite its success over the years, FTX has recently come under scrutiny due to its sudden and unexpected collapse in December. The collapse of FTX, a well-known cryptocurrency exchange, and the arrest of its founder and former CEO Sam Bankman-Fried have sent shockwaves through the industry. Bahamian authorities arrested Bankman-Fried on charges of fraud in connection with FTX, and he's been let out on a $250 million bail. The U.S. Attorney for the Southern District of New York has stated that this is one of the largest financial crimes in American history. John Ray, the court-appointed CEO of FTX, testified before the U.S. House of Representatives that the company had practiced no bookkeeping and that the collapse was due to old-fashioned embezzlement. The fallout from these events has had significant consequences for FTX's customers and stakeholders and raises important questions about the transparency and ethical practices within the cryptocurrency industry. The collapse of FTX occurred over a specified number of days in November 2022. The catalyst was a CoinDesk report on November 2nd that revealed Alameda Research, the quant trading firm also managed by Bankman-Fried, has a $5 billion position in FTT, the native token of FTX. According to the report, Alameda's investment foundation was also invested in FTT, the token created by its sister firm, rather than a fiat currency or any other cryptocurrency. Concerns were raised throughout the Bitcoin sector over Bankman-Fried's company's unreported leverage and solvency. On November 6th, Binance, the largest cryptocurrency exchange in the world, stated it was going to sell all of its holdings of FTT tokens, or around 23 million tokens worth $529 million. Following the failure of the Terra Luna cryptocurrency token earlier in 2022, Binance CEO Changpeng Zhao stated that the choice to liquidate the exchange's FTT stake was centered on risk management. The very next day, FTX was going through a liquidity crisis. Bankman-Fried made an effort to convince FTX investors that their assets were secure, but in the days following the CoinDesk revelation, consumers demanded withdrawals totaling $6 billion. FTT's value decreased by 80% in just 2 days. The world's largest cryptocurrency exchange, Binance, effectively bailed out its close rival by buying the non-US business FTX for an unknown sum on November 8th. The guarantee of rescue was only temporary, as Binance withdrew from the agreement the following day. The exchange said on November 9th that it would abandon the FTX acquisition after corporate thorough research revealed concerns regarding, among other things, the improper handling of customer assets. On November 10th, the Bahamas Securities Commission announced that it had frozen the assets of FTX Digital Markets, a Bahamian subsidiary of FTX, following news that the exchange's founder and CEO, Sam Bankman-Fried, was seeking up to $8 billion in capital to bail out the exchange. On the same day, the California Department of Financial Protection and Innovation announced that it had launched an investigation into FTX. Bankman-Fried apologized for the liquidity crisis and admitted on Twitter that the non-US arm of FTX had insufficient funds to meet customer demands. He attributed the issue to poor internal labeling that led to miscalculations of leverage and liquidity. In the same thread, Bankman-Fried stated that Alameda Research, a market-making firm affiliated with FTX, would wind down its trading operations. FTX filed for bankruptcy after a planned rescue deal with Binance fell through. The bankruptcy filing by the new CEO, Ben Ray, revealed numerous corporate missteps, including the use of software to cover up the misuse of customer funds. Ray also stated that he could not trust the accuracy of the financial statements created under the leadership of the former CEO, Sam Bankman-Fried. The savings of hundreds of thousands of customers who deposited their cryptocurrency on the FTX platform are at risk. Ray's team has so far secured around $740 million worth of cryptocurrency belonging to parts of FTX's business, but he stated that this was only a fraction of what he's hoping to recover. FTX.US, a separate entity from FTX, suspended withdrawals on November 11th following the announcement of FTX's bankruptcy, despite previously stating that FTX.US was not impacted by FTX's liquidity issues. The suspension of withdrawals was later lifted. After filing for bankruptcy, FTX announced that it had been the victim of unauthorized transactions and would be moving its digital assets to cold storage for security purposes. Analysts suspect that around $477 million was stolen from FTX in a suspected hack. The bankruptcy and investigation have put the future of FTX in doubt and left customers worried about the safety of their assets. FTX's collapse sent shockwaves through the cryptocurrency market, causing billions of dollars in losses and pushing the market's value below $1 trillion. The aftermath of FTX's rapid decline and collapse is expected to have long-term consequences for the crypto market and could even negatively impact broader financial markets. Investors and customers have lost billions of dollars as a result of the bankruptcy, and it's unlikely that all of these losses will be recovered, according to FTX CEO Ben Ray. On November 16th, a class action lawsuit was filed in a Florida federal court alleging that FTX founder and CEO Sam Bankman-Fried had created a fraudulent cryptocurrency scheme that targeted unsophisticated investors from across the United States. The lawsuit also named celebrities such as Steph Curry, Shaquille O'Neal, Shohei Ohtani, Naomi Osaka, Larry David, and Kevin O'Leary as defendants, claiming that they had helped Bankman-Fried facilitate the alleged fraudulent plan. The suit was filed in the wake of FTX's bankruptcy announcement and the ongoing investigation into the exchange's business practices. The fortunes of FTX and its founder, Sam Bankman-Fried, are closely intertwined. Bankman-Fried is currently being held in a Bahamian jail, awaiting extradition to the United States to face an 8-count indictment that was filed against him on December 13th. The indictment alleges fraud against investors and customers. The Bahamas Securities Commission froze FTX's assets, and other regulatory investigations are ongoing. The legal proceedings and regulatory actions have significantly impacted FTX and its operations, leading to the exchange's bankruptcy and raising questions about its future. Sam Bankman-Fried, the founder and former CEO of FTX, was charged on December 22nd with 8 counts, including money laundering and securities fraud. During a court hearing, a federal judge agreed to release Bankman-Fried from custody after his attorneys and federal prosecutors reached an agreement for a record-breaking $250 million bond. As part of the agreement, Bankman-Fried will be confined to the Northern California area, required to wear an electronic monitoring bracelet, and undergo mental health and substance abuse counseling. He'll also be required to reside with his Stanford law professor's parents in Palo Alto, California. The indictment and legal proceedings are the latest developments in the ongoing investigation into FTX's business practices and the fallout from the exchange's bankruptcy. This bankruptcy has been one of the biggest failures in the crypto industry this year. The collapse of the exchange sparked a cryptocurrency market downturn and has left an estimated 1 million creditors facing significant losses. The impact of FTX's bankruptcy is likely to be felt for some time to come, as investors and customers try to come to terms with the aftermath of the collapse. The event has also sparked calls for greater regulatory oversight of the crypto industry, as policymakers and industry experts seek to prevent similar incidents from occurring in the future. Financial industry executives and lawmakers have called for greater regulatory oversight of the cryptocurrency industry following the collapse of FTX, arguing that regulators must protect crypto investors from similar events in the future. These calls for increased regulation come amid a series of market crashes and corporate failures in the sector, highlighting the risks to consumers and the need for effective rules to address these issues. The cryptocurrency market reached a record value of nearly $3 trillion at the end of last year, but market turmoil and a series of industry setbacks have caused the market to lose more than $2 trillion in value. The largest cryptocurrency, Bitcoin, has seen a drop of 75% from its record high of $69,000. The extreme volatility of the crypto market has caused some skepticism among financial industry executives, with Morgan Stanley CEO James Gorman stating that he does not believe the market is a fad, but he's unable to assign an intrinsic value to it. Gorman also expressed concern about the potential for significant losses for investors due to the wide range of outcomes in the crypto market. The resilience of the financial system has been tested over the past year as the value of the cryptocurrency market has fluctuated dramatically. After reaching a peak of $3 trillion last November, the market experienced a significant decline, often referred to as a crypto winter, and is currently valued at around $800 billion. The market's decline was due to a combination of crypto-specific events and broader macroeconomic issues. While the crypto market has experienced significant ups and downs, global financial markets have also been affected by other factors, such as the Russian invasion of Ukraine and rising interest rates. In conclusion, the collapse of FTX was a startling example of what can happen in the cryptocurrency industry if transparency and ethical business practices are not followed. The events leading up to and following the collapse demonstrate how quickly fortunes can be made and lost in this uncertain world. Sam Bankman-Fried's rise to becoming a billionaire within 2 years was an incredible feat, and his subsequent fall from grace was just as impressive. In the wake of this cautionary tale, investors should be aware of the risks associated with investing in cryptocurrency markets and remain vigilant in scrutinizing the operations of any digital currency companies before making investments. Additionally, it's important to remain mindful of the potential consequences that can arise from a lack of regulation and transparency in the cryptocurrency industry. This brings us to the end of the video. It's our hope that this video has provided a greater understanding of the events leading up to and following the collapse of FTX and the lessons that can be learned from it. With this knowledge, we believe that people will be better informed when investing in digital currencies and better equipped to navigate the volatile cryptocurrency markets. Ultimately, by practicing caution and exhibiting transparency in our operations, we can work to create an ethical and vibrant digital currency market. So what do you think we've learned from the fall of Sam Bankman-Fried's billion-dollar empire, FTX? Share your thoughts with us in the comment section, and don't forget to like the video and subscribe.